Good morning, Oracles. Oh yeah, what a great day Tesla saw yesterday, closing over $800. That was a great day. Let's see if it holds. Obviously, we have the FOMC meeting today that could turn the market one way or another depending on how it goes. A week or so ago, I thought maybe today was going to be kind of a nothing day. I didn't know if anything was going to happen, but still seems like there's a little bit of turmoil. We might see some red and volatility leading up until the meeting, so we'll see how that plays out. Obviously, as we talked about last night, maybe some of the things that Jerome Powell says could sway the market one way or another. But as long as we get some guidance and some clarity as to what their views are going down the road, that should help us at least formulate a plan for our own investing strategies. And so just like we talked about yesterday, going through these times with the whole market and the inflation, what companies are going to do the best coming out of it, and Tesla is going to be one of them because they have the pricing power. And they used their pricing power yesterday. Ironically, I had conversations with several of you about, the prices of the vehicles, and Harlan had mentioned himself. He's like, hey, why haven't they raised prices? And hey, they listened, and all of a sudden, all of the prices went up on all of the vehicles. So I'm glad that I made the decisions I did with mine, put FSD on, took it off. And for me, I happened to catch that sweet window where the price of my vehicle did not go up, because if I decided to make that choice today, I would be paying significantly more for my Model Y. So I lucked out, I timed it well. And for those of you out there who don't know, Tim is the luckiest name that's out there. Don't know why, don't know who came up with that, don't know what studies they did to figure this out, but that's what I have read and have been told. So I utilized my name and got lucky on that. But looking at all the vehicle prices going up tells us, something that we had questioned over the weekend as well, with Elon's tweet, saying, why did he tweet, saying that SpaceX and Tesla are really seeing the effects of higher inflation with the pricing of all of their materials? And then sure enough, here comes the pricing. So I almost wonder if Elon sent that tweet out there to kind of let people know, by the way, our prices are going up, so your prices are going to be going up as well. And Elon still does want to bring the prices down. Their goal is still to make an affordable EV for the common person to purchase. But unfortunately, they have a business they need to run as well. And with demand being as high as it is, they have the luxury of pricing power to raise the vehicle prices to whatever they need to be able to, keep their margins higher and be able to cover those costs of all those raw materials. And now what's going to end up playing out with this is the prices went up this last night. And so people who are going to be placing their vehicle orders depends on what they're putting on there, because we know that FSD is getting priority. Higher end vehicles are taking priority. So if everybody is buying new vehicles with FSD, those higher prices could be reflected in Q1 or Q2 earnings. But if they don't get the FSD, they'll probably end up getting pushed down to the end of the line, which at this point is looking at, early 2023 for a delivery date. So we won't see those prices reflected in earnings until that point. So there's going to be definitely a different mix of vehicles going on. Last quarter we saw average price of the vehicle around $51,000. So with prices going up, it will be interesting to see what the average vehicle price is for Q1, because then that can help us with prices going up now. That can help us determine what Q2 and Q3 could be looking like for an average vehicle price, knowing how they're prioritizing vehicles, knowing how they're prioritizing FSD. So just different things to pay attention to during the earnings that we go into with these prices going up. And I'm definitely anticipating in the next couple of weeks more price hikes. We saw it last year. It was every couple of weeks, prices were going up all the time. I think we're going to end up seeing that same thing over the course of probably the next 6 months, if not more. It really depends on when inflation starts to come down and the supply chain issues start to wane. And so we've got 2 weeks left in the quarter, and then beginning of April, we should see sales numbers that are coming out for Q1. That's really going to be the sign. And as we saw back in January, when we got the Q4 numbers, the stock took off. Obviously we've sold off significantly since then, but that's where it really took off. So the earnings call might not make a huge difference because we're going to get numbers then. I think on the Q1 earnings call, margins are going to be a huge piece, and then just how they discussed how they're handling supply chain issues, how their costs went up. But we're going to get the important production and delivery numbers beginning of April, and that's really what's going to set the tone for the Q1 earnings call. And looking at how the stock is trading, we are still in our wedge pattern. I'm going to map it out. It's going to be a while before we hit the apex, before we go up, but that apex might actually be either when we get the Q1 delivery numbers or Q1 earnings call. Either way, we are still in this wedge pattern, and depending on how things go with today's FOMC meeting, if we still hold within this wedge pattern, that's going to be a great sign, because chances are we'll have this volatility coming out of it. So if we still hold into it and we do go green after the FOMC meeting, that could tell us that we might actually see a true breakout coming for the stock. And if we do see the breakout, that's going to be awesome, and that will be our opportunity for those of you who do some swing trading, maybe some options, or if you flip shares in your IRA, that would probably be the time that you would want to sell. Yes, I did say sell strictly for those people. Anybody holding long term, just ride it out, not a big deal. But looking at the fact that we might actually get that double bottom in May, not for sure, not guaranteed, but just seeing that it might actually happen at that point, freeing up that cash and selling off those shares might be a good time to do it at that point. We saw that happen back in January. Delivery and production numbers were great. Price skyrocketed. We thought it was going to continue going up. And a week and a half later, whoop, carpet went out from underneath us and the bottom fell out and the stock fell way down. That could potentially happen again. So again, this is just another scenario that I'm playing, not trying to be negative, just being realistic so that you can be prepared for it just in case that does happen. I would love for it to cross $1,000 and just keep on going. But I got to be realistic with my portfolio because, a wise investor understands the market cannot always go up. And at the same time, a wise investor knows that the market can't always go down. So we are going to come back. I just don't know when. So tell me in the comments, how do you guys feel about the prices of the vehicles going up? I know from a consumer standpoint, it's frustrating because you're paying more money, but from an investor standpoint, it's obviously a good thing because higher margins mean more profits for the company. More profits for the company means they can invest more into the company and build it and grow it even faster. So, let me know your thoughts on which side of the coin you're on for that one. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.